Well, let's turn our attention to the metal space. That's been shining. Metal prices as well have bounced on the back of hopes of Chinese stimulus. Domestically, we have seen price increases. And the hope is that the Chinese will export less amount of steel. All this bodes well for metals. Let's find out how do you approach this space. Rakesh Arora, founder GoIndiaStock.com, joins us on the show. Hi, Rakesh. Good morning. Thanks so much for joining in. Well, Rakesh, before we get to the Chinese stimulus part of it, over the weekend we have this news that Tata Steel and the UK government, after many quarters, finally it appears that a deal is something that they could crack. What's your view on the stock and your view on the deal itself? We're talking about around 500 million support from the UK government, 700 million is what Tata Steel will put in. Your view on it?
So, see, this is a location which is, historic in nature. The plants are like 30, 40 years old and needs a replacement. And given the economics, Tata Steel was, not inclined to invest into this facility and have been partly closing down some of the, ancillary units which are around this, main unit. So without the government support, this unit is not economically viable. See, in the overall scheme for Tata Steel, this is now getting immaterial. Tata Steel is becoming very big in India, and this capacity would be hardly like 2 to 3 million ton. So it doesn't really matter, and it's so it's positive, but it doesn't really matter in terms of whole scheme of it.
Got it. All right. So this unit, quite small in the whole scheme of things for Tata Steel. Let's focus on the steel stocks first before we get to the non-ferrous. What's your view on these stocks, Rakesh? Would you be a buyer at current prices? And there are a couple of factors that are looking up. Steel prices, demand is quite strong. The poor monsoon may be boding well for some of these long steel products as well. Your view on the steel space, and which stock would be your top pick?
So, Nigel, there has been a little bit of a price hike in the long steel product. And this is kind of corroborated with, the sharp increase in volume for cement also in August. So we had a very decent, monsoon in July. But in August, there's been a little bit of a drought kind of situation, and that has allowed construction activity to pick up. Please note that we are into the pre-election year, and government is really pushing infrastructure projects for completion before the election dates are announced. So we have seen a little bit of pullback in rebar prices, but this is still lower than what it was in Q1. And at the same time, coking coal prices have also moved up and iron ore prices have moved up. So I don't think margins have really moved for the steel companies. When I come to flat steel, steel prices are largely stable. And when I see, prices coming out of China, the export prices are still lower than what they were in Q1, and Q2 was even lower than Q1. So overall, prices, I don't see any, major reaction coming in. We would get into busy season from October, and prices, domestic premium, etc., do tend to go up. So beyond that, I don't really see too much of bullishness in steel.
Okay. Would you buy any of these companies, though? Any of these steel companies at current levels, or would you stay away? Or do you have a preference to the non-ferrous space?
So, Nigel, most of the steel stocks are trading at reasonably, good valuation. So they are trading above their median valuation, and we are into kind of a mid-cycle earning zone. So I don't really see too much of an upside for these stocks. There could be some, company-specific, ideas which people can look at. But overall, I think we are into a neutral territory. But from a medium-term perspective, I think non-ferrous has a better chance because if this China stimulus does come through and we do see a pickup in investment in renewables in Europe and US, then non-ferrous side looks much more interesting. The inventory levels are so very low, so I would rather prefer non-ferrous over ferrous space at the moment.
So what do you play out there? Hindalco, the converter, Novelis's prospects could improve from here on. Vedanta, valuation-wise, is looking good, but the promoter entity, issue plagues them. And also, I wanted your view on Hindustan Copper. Valuation-wise, the stock at 160 rupees is very surprising. But clearly, the street has some positive view on copper and the way ahead as well.
So, see, the pure play aluminium is NALCO and Hindalco, and they are the preferred bet, I would say, as compared to Vedanta, which has, a lot more things going through. And it's difficult for investors to really figure out, how things will shape out eventually. Coming to Hindustan Copper, see, copper is in a sweet spot, and given the, thrust for non-renewable, investments, etc. But as you rightly pointed out, even if we were to assume that Hindustan Copper would double its production, it's difficult to justify the valuation where it is trading. So there's momentum, but fundamentally it doesn't really make sense.
Rakesh, hi, morning, Prashant here. Slightly off-track question out of syllabus, but we hear a lot about this rare earth and the opportunity there, and this competition between China, the US, and that's going to be a big thing because it's rare, I guess. There's things like uranium, and is there a structure for like an ETF or a product for investors to kind of get exposure to these things? Just out of curiosity, have you looked at that space?
So, Prashant, just to tell the viewers, that 70% of investment into EVs, into renewable sector, is happening in China only. So, if they are sitting on that, this rare earth material, they are actually exporting the finished product, and that is really available to the rest of the market. So the only way to really play would be, look at auto stocks in China. I don't think there's any other way. Obviously, there are a few metal companies listed in Canada, etc., which investors can explore. But from Indian perspective, there's hardly anything which Indian companies can look at.
Okay. I see. All right. There's Nigel. There's GMDC, right?
GMDC. Yeah.
But that is again. But it's. I think there are issues there, and it's like separate at the government under government control.
We're waiting by for the fine print.
Fine print, and yeah, absolutely. Rakesh, thank you very much. Great to speak with you. Appreciate you joining in with that perspective, and it's always a pleasure. Well,